Good morning, everyone. Welcome to the modern market, where every day we discuss everything to do with the modern market. That is the crypto market, the NFT market, and the Bitcoin reserve market. We are going to get into everything, predominantly focusing on the strategic Bitcoin reserve today. President Trump has signed the executive order establishing the US strategic Bitcoin reserve. We'll take you through all those details almost line by line, but focusing on the most important things. We've also got news about Congressman Begich announcing news to come with Senator Loomis next Tuesday. We'll discuss the significance of that, and also not to ignore on the state level, Texas surges in the US state's race to put public funds into crypto. We'll focus on that as well towards the end of the show. We've also got the latest on price action on crypto and NFTs, plus a general take on market thoughts as well. We're looking forward to talk to founder of Somnia, Paul Thomas, a little bit later in the show. So really looking forward to that conversation in just a little bit. But in the meantime, I've got Legendary and Bread with me here in the co-host seats, ready to get into it. But just a reminder, friends, before we do, nothing that we say here is financial advice. This market is very, very risky. So please proceed with caution. Exercise your own judgment, do your own research, and don't blame us for anything. With that out of the way, Legendary, it's Friday. It's the 7th of March. How are you doing on Strategic Bitcoin Reserve Day?
GM, doing quite well on Strategic Bitcoin Reserve Day. Was more concerned, honestly, with the fact that I wanted to change my PFP today. But then I was thinking about the show. So, I've been dabbling like more in Sonic and obviously seeing what's going on there on the yield side. On Sonic, they have the derps, and that's basically the leading PFP collection. I'm just going to bring one of them up on screen real quick, because then you will understand my thinking. This is one of the PFPs. And I was like, I can't have this on a show on a day where we interview a founder for the second half. And this is this is the first impression I'm giving off. So I was like, maybe rethink that on the weekend. But doing quite well on this Friday. More so really thinking about the volatility in the market and not wanting to be concerned with that. And hence my explorations of other chains and the things that are to do there.
That is, sounds wise. Sounds like there's some other things. Maybe we'll touch base with you in a moment to get a sense of what you're doing there. In fact, why not just let us know now? What are you looking at on Sonic? Is there anything in particular?
Couple of things going on, yeah. Aave launched on Sonic, but that filled up extremely quickly. So you can't deposit neither Sonic nor USDC there anymore. There's still Ring protocol to farm stables. There is actually a site, I'm going to look it up and put it in the comments. It's accumulating all the DeFi yields there, and where you can pick between some other liquidity pools as well as stable coin farming. There's also an interesting platform that I came across that basically you need to hold, it's Yell.finance on Sonic. You need to hold their token. And if you do so, you will be shown different arbitrage opportunities across various DeFi protocols that you can like close and earn 50, 60 bucks by doing that every time, which is not a lot of money, but conceptually, I like this idea. I find it very interesting. And they've been having a bunch of token launches, NFT collections as well, which did pretty well, but it seems to be a very tight-knit community. And none of this is sponsored, it's just me exploring that chain. But there's one thing that I found that actually made me happy and pissed at the same time, because there's a Sonic conference happening in May, 3 days. It's in my hometown, it's in Vienna, but I'm not going to be there. I'm traveling at this time.
Oh, no.
So this is the thing that annoys me. Like, finally, we have something interesting going on here, but I'm gone for that.
That is unfortunate. That'd be a fun one to attend. I appreciate that quick breakdown on Sonic. There's definitely something I think is useful to have a look into at the moment, because there's a clear incentive program in place there for people who are trying to allocate some capital, at least for the short to medium term. Bread, how are things with you? You seem to be in another location, traveling around a lot at the moment, testnet going live. How are things with you and Mega at the moment?
Life of a creator on the road. You guys might be watching the stream and seeing lights flashing, and it's because I'm nestled closely under a giant effing TV. So I'm trying to make this thing work. I got my lights here, trying to make it look streamer quality. I don't think we're gonna make it work, so we're just gonna hang out. But yeah, we're in New York. Testnet kicked off yesterday. So for builders, it kicked off for builders. So working through that, making sure everything's up to snuff. People have the information that they need, trying to roll out information. Did some educational pieces on like our construction yesterday, but yeah, just enjoying the city, enjoying being in person with the team. We're all kind of just like it's kind of cool. We like me, Shu, Dominic. There's like the core team, the business team. So like 4 or 5 of us just chilling here in a New York flat. And then I'm in a hotel, but that's we meet up there at Domic's place. And then like people, New York's kind of becoming a hub for crypto shit. So we just have a lot of people rolling through of like a couple of VCs, a couple of hedge funds, a couple of like builders in the space. So like we're all just like heads down, doing our shit. Like, startup style, and then people roll in from all across the industry to hang out, talk, shake some hands. It's a lot of fun.
That's fun. I've been hearing that about New York increasingly, right? Like there's been, I think, to be honest, even in the bear, even when regulation wasn't set properly, I think people were still super bullish on New York, and there was still like an awesome crowd there to raise money and do business. And even in those times, I can only imagine the explosion that's going to take place now.
Yeah, I know. I actually just like to tweet from Andy from the roll up where he's just like, US will be like the hub and New York will be the epicenter of like crypto going forward, which whatever. I know we're having strong considerations of trying to increase our footprint here, get an actual office and do some stuff so that we can make this a hub and have other
cool.
teams, builders and stuff roll through, guests like yourselves if you were to come into New York.
Very nice. Yeah, that would be very fun. So long as when provided with accommodation, we have lights in these rooms. I swear to God, when this happened to me, I don't know if anyone's going to fudge you in the comments, Brad. When did this happen to me when I was in Miami and I was complaining, like, where are the lights in these hotels? Everyone put it on me as if I chose to live in a prison room, and I chose specifically to choose a hotel with no lights. I'm saying this is a worldwide epidemic in lighting in hotels.
It is. I think there's actually it's hotels themselves are it's dog shit at being able to pick like the room or accommodations you actually want. You're kind of just eating your money at someone based on something that Google told you was X amount of dollars per night. Turns out it's Y dollars per night. And you just kind of show up and hope for the best. You don't know which room you're getting. I have these big windows next to me, and I came and laid down the first night and realized that like New York, close buildings. A lot of people can fucking see me, man. Like I'm basically like I'm a fucking goldfish, which it's kind of fun. But it's yeah, man. They all have their spice.
Need new metrics to measure hotel rooms, because just saying the room and some of these amenities are not enough. Need to know these other details. But look, putting some of these crucial details aside, there was some other pretty important news to get you onto today. So let's get into that as usual, starting with the price action, then got the huge headlines coming up in just a minute too. We've got on the majors, we've got Bitcoin, unsurprisingly, down a couple of percent on the news today. It was 89K. ETH is down almost 4% to 2.2. XRP is down a couple as well to 2.5. BNB is at 600. Solana's down 4 to 143. Getting into the meme coin side of things, just checking what is going on over there. We've got Doge down a couple to 20. Pepe is flat. SHIB is flat. Most things seem to be down like a couple. WIF is down 6. SPX is down 8. Pudgy is down 3. Fartcoin's down 20, but it had also gone up randomly loads yesterday. I think AI16Z down 15. Man, if you're trading meme coins still, you've got to have a lot of something about you.
Googly had a picture of like the last 30 days of like the top 100 coins, and it was just a brick of red, like anywhere from like 30 to 90%.
Yeah. The risk reward is just like it's the huge breakdown, but then one day it'll go up like 22%. And then
this is our entire industry, right? Like this is like relative to traditional markets, like that's why people come in here. It's like, oh, it can go up 20%. Awesome, cool. Relative to stocks, that's fucking crazy. And then we have people who aren't satisfied with that, so then they do meme coins and goes, even that can go up 2,000%, but also 0. So it's like our perception of the world is warped.
But that was life, I feel like, in NFTs after the peak last cycle, where we had 10% down, 10% down, 10% down, and then one day randomly 20% up. Everyone was happy. and we had then another week where we went down every day. I feel like it's the same for memes now. We bleed mostly, and then we have this one day of recovery where everyone like seems to be excited about that, and then the bleed continues.
Absolutely. Savage at the moment. Good luck to you if you're in that specific market. Getting into the headlines themselves, we've got first and foremost, and we'll dive into this in detail in a moment, President Trump signing the executive order establishing the US Strategic Bitcoin Reserve. In essence, some of the key points: the US will not sell any Bitcoin deposited into the reserve. It will be kept as a store of value. The reserve is like a digital Fort Knox for the cryptocurrency, often called digital gold. I'll break down some more interesting aspects to the full order a little bit later. In other news, Congressman Begich announced his news to come with Senator Lummis next Tuesday. He tweeted, "It's time for America to become the first Bitcoin superpower. Working on something big with Senator Lummis. Stay tuned for next Tuesday." There's always these announcements of announcements now, or teasing of announcements. I guess that's the new way we're going to operate in the political Bitcoin sphere. And then finally, not just to focus on the federal level, on the state level, Texas, as the Texas State Senate passed the so-called SB 21 bill, which would allow the state to invest some of the public's money into digital assets, specifically Bitcoin. So it feels like some states might start getting their act together and starting to move on accumulating Bitcoin. Legendary. Quick pause there. Anything headline noteworthy on the NFT side? Otherwise, we wrap up from around the space because kind of some other interesting news too.
Just going to keep it super short on the NFT side of things. Most notable over the week actually are the little pudgies, which are up almost 20%, up 19%, back above 1 ETH, 1.11 ETH to be specific. Pudgies, the big ones, also up 8% over the week. Bored Apes and Mutants up 6 and 8 respectively. So over the week, we do have a solid green movement for JPEGs, which ultimately is being led by the punks. Punks are up again, 38.5 ETH floor for the CryptoPunks. And once again, we've seen a day with quite some sales above the floor, but that's it on the NFT side of things.
Sounds good. Thanks for the roundup there. In some other important news around the space, CEO of Coinbase, Brian Armstrong, praises the execution of the Bitcoin Reserve establishment. He said, "Incredible execution from the Trump administration and a historic moment for Bitcoin and crypto." I've got some other interesting responses as well, which I'll take you through when I go through the document in more detail. Trump's World LibertyFi partners with SUI. SUI added to its strategic reserve. A lot of criticism on that one, to be honest. I think people's position is mostly, why are people allowing this? Why are people not speaking out against it? It seems to be that it's just a pay to play situation where people are paying to have their stuff put into the World LibertyFi treasury. That's not confirmed, of course, but that seems to be the definitive position or opinion of many influential people. SBF was interviewed by Tucker Carlson yesterday. That was one of the weirder things to see. Former CEO of FTX being interviewed from prison, an inmate alongside P. Diddy, who's also in the same prison, in a strange interview yesterday, potentially him suggesting that one of the noteworthy things he said, "I don't think I was a criminal." So the answer to that is no when asked if he thought he was the biggest criminal in the crypto business. Didn't seem to be very apologetic, to be honest. In other news, Seismic announces $7 million raise led by A16Z to deliver a privacy-focused blockchain. Double Zero announced a $28 million token round with Dragonfly and Multicoin Capital leading to build a new, faster fiber network for high-performance blockchains and distributed systems. So these raises are still taking place, getting backed with significant funds. And then finally, on the gaming side, prominent gaming DAO WolvesDAO announced a grant from Avalanche Foundation ahead of its WOOF token launch. That's coming soon, and pretty significant because all kinds of stuff been popping off on Avalanche. WolvesDAO, very, very established, very respected gaming DAO, deciding to work with Avalanche and securing that grant. So well done to them. That's the Web3 roundup. Before we get into the main headlines, Legendary, anything catching your attention here?
Yeah, absolutely. And it is the SBF interview. Like, that I typically don't manage to listen to other shows' podcasts because I'd rather read content. That's my preferred way of consuming content. But that was definitely an exception that I had to listen in and went through the first like half of it in the morning. It's such a weird setting, and it was interesting to see SPF being now more basically quote unquote chill and more relaxed when he's talking, as jumpy as he used to be last like when he was on interviews. But B, I was also wondering, is there a way where we can get SPF, since apparently it's possible to do interviews from prison now, where we can get him to do an interview for funding crypto? Ultimately, the funding crypto idea is to interview founders in Web3, but we never spoke about the fact whether those founders can be in jail or not.
Probably not incarcerated. Incarcerated, he's not an active founder. He's not an active founder unless he's raising. If he's raising,
maybe
think we can get him a streaming setup. What do you think are odds of getting him a nice little pod mic in there, a stream, like a little light?
Dude, he had more light in the interview than you have here in the hotel.
I know. I'm opting away from the TV. I'm gonna have aneurysm if I keep getting flashed.
Funky, welcome to the stage, man. You wanted to come in on, is it SPF or something else in the news?
No, just in the news, one thing I was going to say, and I'm sure we'll touch on this more broadly. I think the news with Lummis is big because it's congressman. So that's probably what I've been talking about for a long time insofar as getting a companion bill to her bill in the Senate, in the House, and then that way we can actually push forward legislation. And the other thing too that I think is really noteworthy is Texas and a 25-2 vote or something like that in their Senate passed their strategic Bitcoin reserve bill. They're the 8th biggest, like if you're comparing them on a world stage, 8th biggest economy in the world, just Texas. And Florida has one going through their legislation right now too, the legislature. So really big things coming.
America. Hear that, guys? 8th biggest in the world embedded inside America.
We like it. We like it. I've heard some compelling arguments, which is, I mean, we'll get onto it more in a moment, but quite compelling that if anything, on the political side, having that confirmation from the federal level just allows the states to go and do what they need to do. So arguably it's the states that can actually take the most action faster. And so for that reason, it's set up pretty beautifully. But we'll get into that in a second a bit more. Brad, anything on your side before we get into the main stuff catching your attention, either from the roundup or anything else?
No, my actually, yeah. So I talked about Ethos last time. I just went and played around on it yesterday. They have slashing enabled now, so like you can put up your cred against someone else's cred.
I think SBF was getting slashed aggressively.
He was aggressively. So I wanted to make it fun. I got in too late. You can only have 3 going any given time. I'm not going to give away my secret, but there's someone I'm going to slash. That is not just like SPF is a dunk, right? Like it's like, duh. Of course, everyone's going to do that. One of them was like kind of, sort of. Imlo did one that was like a co-founder of Moonbirds, which is like also whatever. So I'm trying to work with OX5F to make sure that whenever the next round opens up in like, I don't know, half a day or whatever it is, that I can get mine in, because I want one that's juicy. Because like, I mean, I have decent credit over there. I have like 1,800 score or some shit. So like, which is good. I think I'm like top 40-ish. But like, it's just it's fucking internet numbers. Like that's all you're risking right now. I'm not like losing money. So I want to slash someone that's like makes people like talk about it a little bit. So we're gonna risk it a little bit if I can get in. Like, oh yeah, you can only do 3 at a time.
I think it's actually super interesting that the slashing. So basically, the way it works is if more than 80%, I think, are in line and vote that the person you want to slash is to be slashed, then the slashing happens. They lose their reputation. They cannot seek revenge against you. So the next 10 days, they can't go back on you and try to get you slashed. But if the slashing doesn't go through, you lose your own reputation, which you then put on the line. And that's like, if you extrapolate that a bit, that could be like really interesting. We've seen it with Kaito, with like monetizing other projects for the voting, for the yapping side of things. And if Ethos like were to actually take off and people looking at the reputation being like, no, if you have a reputation under 1,800, I'm not going to do a deal with you. Or if there's like deals tied to reputation, then it would be like really interesting to see who is getting picked to be slashed. Because you're making the point, right? I slashed SPF because I wanted to use the feature, and it's a 0. I'm also like a 1,800 something reputation. I didn't want to risk it. So I'm going for the quote unquote easy victim because I know everyone's going to slash SPF. There's like 0 risk for me to do so. But if you have someone juicy to pick, I'm like, yeah, maybe I agree with you, but do I want to risk and stake my reputation on slashing that person? This is when it gets really interesting.
Yeah, so my selection is like the dynamics. I'm gonna give you the person, I'll give you the dynamics, maybe you can pick it out. So like my reputation is higher than theirs on Ethos, but they are active in Twitter and they have a much larger account. So like
Vitalik.
Actually, do I have a higher up than him? I think he's actually pretty high up on the rep score too, just because
He's also in the 1800s. Yeah.
Yeah. But yeah, like this person's only like, I don't know, like 1300 or something on there. So like he's very mixed on there, but he's very, very prominent on the timeline.
Interesting. It sounds like you're going to enjoy this quite a lot, Brad. I'd be kind of
the spectacle of it. Like I just think it'll be fun. Let people like fuck around a little bit. I like OX5F, so like I want like his platform to like get some shine. So it kind of works out for everyone.
Sounds fun. Look, we got to keep it moving. Oxy, I know your hands up, but we got to get into this Bitcoin stuff because we've also got the conversation with Paul coming up from Somnia. That's a little bit earlier today. It's going to be around 1:45. So want to keep it moving for now. Hopefully you can come in on the Bitcoin stuff in a moment, Oxy. Right, let's get into the big news, guys. Bitcoin reserve established. And I was just going to take you through some of the core aspects. So the official document, Legendary, I've shared with you, if you can bring that one up. This all took place yesterday. Going through line by line, we've got in the background section, this is what they said about the reserve. They said there will be a strategic advantage to being among the first nations to create the strategic Bitcoin reserve. The United States government currently holds a significant amount of Bitcoin. One thing I thought about this is that they didn't actually say how much. I know lots of people have speculated and said this is how much the United States government have. Nowhere in this document did they admit to having a specific number. And it felt like, I don't know, it's just me reading it. It felt like there could be either more than expected or less than expected. So it feels like it's not the expected number. That's just me reading it with my own eye. But they said that it holds a significant amount of Bitcoin, but has not implemented a policy to maximize Bitcoin's strategic position as a unique store of value in the global financial system. So that's what they want to do from a background perspective. They then said that within 30 days of this order, each agency, and this is to do with the point that no one knows how much they have, or they certainly don't know at the moment, each agency shall review its authorities to transfer any government Bitcoin held by it to the Strategic Bitcoin Reserve and shall submit a report reflecting the result of that review to the Secretary of the Treasury. Government Bitcoin deposited into the Strategic Bitcoin Reserve shall not be sold. So what they're doing is they're initiating a process which should happen within 30 days of the date of this order, where if you are a government agency which has any Bitcoin that's been seized for whatever reason at any point in time, this now needs to be put all in one place. That is that instruction. And then in addition, they said the Secretary of the Treasury and the Secretary of Commerce shall develop strategies for acquiring additional government Bitcoin. So this was the big question, right? I think people thought that yes, we won't sell what we've got. B, it would be hard to buy more, especially if it's with taxpayers' money. But what they're saying is we will come up with strategies, or we're going to attempt to come up with strategies to acquire more, provided that such strategies are budget neutral and do not impose incremental costs on United States taxpayers. So that is the crucial point there. A funny point to make is that Michael Saylor responded to the David Sachs tweet with this. I'm just going to share it on screen for 1 second. He said this: I have a few budget neutral strategies for acquiring additional Bitcoin. Obviously, the way he does it is he raises a ton of capital. I don't know if that would be an appropriate strategy for the government, but he clearly liked the sound of that. They've also got this additional stockpile, right? So they've created the United States Digital Assets Stockpile, and they've said within 60 days of the order, the Secretary of the Treasury shall deliver an evaluation of the legal and investment considerations for establishing and managing the Strategic Bitcoin Reserve and the United States Digital Assets Stockpile going forward. And then finally, just from an accounting perspective, within 30 days of the date of the order, the head of each agency should provide the Secretary of the Treasury with a full accounting of all government digital assets. So whether that is Bitcoin or any other digital asset, everything needs to be accounted for now. It should all be held in one place. So that's the key set of details that I think you need to know on what I think is a very, very historic day for not only the country, but also the world and the history of money, like the history of value. Pretty historic. Just to go through a couple of reactions to get people up to speed with what people have kind of evaluated this, and then would love to hear your guys' thoughts. Balaji commented to say the executive order is historic. He said it focuses primarily on Bitcoin. It costs US taxpayers nothing, and it saves billions by not selling. Nick Carter, who's actually been quite vocally critical of the concept of a Bitcoin reserve recently, said announcement couldn't have gone better. The campaign promise was kept from a political perspective. Bitcoin reserve clearly distinguished from altcoin stockpile. So those two things are separate. Bitcoin gets official US government seal of approval. No other coin does. No taxpayer dollars spent to acquire coins, so there will be no backlash. And the future acquisition of coins likely left to Congress, as it should be. So, you know, that decision-making process on how people are going to attempt to get more Bitcoin, that is to be decided. The CIO of Bitwise, who have their ETF out, said this. They said, first, this dramatically reduces the likelihood the US government will someday ban Bitcoin. It dramatically increases the likelihood that other nations will establish strategic Bitcoin reserves now. It accelerates the speed at which other nations will consider establishing strategic Bitcoin reserves. And it makes it much harder for institutions from national account advisor platforms to quasi-governmental agencies like the IMF to position Bitcoin as somehow dangerous or inappropriate to hold. So a huge legitimizing process, I think, has just taken place where people should feel far more comfortable. And arguably, there's like a window now where people might feel they have an opportunity to buy at a better price than whenever the United States may add more at some point in future, if that ever happens. Nevertheless, they've obviously got this huge stockpile already. So even to get something on the board, I think would be something for other investment companies, investors, and countries. That is my quick summary. There's a bit of extra detail there, but curious to hear your thoughts, boys, on what I think is a pretty historic day. Legendary first, then Brad.
Pretty historic day indeed. First thought, I think one of the main points from the commentary that you pointed out is exactly the Bitwise take to say it is so much harder for other institutions now to try to tell you BTC is dangerous, it's inappropriate to hold, it's a scam, it's just used for money laundering. That is, for example, a route that the European Central Bank has been following and publishing their blogs and saying it's doomed to go to zero value, it's only used for illicit business, etc. And now having the US saying, nope, we think this is a cool thing to have, and not only a cool thing to have, but it's worth to build a strategic reserve around that, however that looks like. That is, to me, one of the most massive things to come out of that, because it has so many like second and third order effects. Even taking the next step of that, when we spoke about the interview that we did with Luca Netsby, and you asked me, can you please put the link with the mint to Spotify, to YouTube? My first instinctive reaction was, let me check the terms of services. I know it's cryptocurrencies and NFT. Can I share a link where NFTs will be minted? Is this all a scam? Like, this is the US strategic reserve for Bitcoin. It's like a massive thing pushing away from this scammy narrative. We're saying, no, showing this is a legitimate industry and it's worthwhile to explore that. It's not something we need to ban outright. So this change of optics is like one of the most massive things to come out of that. That's the first thought on it. Second quick thought on that, the market reaction. Don't want to go too deep into that because we have 2 follow-up news and we have to go into the interview in 10 minutes roughly either way. I think we spoke about it on the show months ago. It was Stats Point that this will happen, to relabel basically the BTC that the government is already holding as like the starting point, at least, to the strategic reserve. Market probably had higher expectations, sold off aggressively, bought that back again, since we have more announcements happening. So that's not something I pay a lot of attention to. And thirdly and finally, amusing thing to me was to see that the US has no clue how much BTC they have. And it's quite funny that a country, a government, expects you to do your taxes, to know every single transaction, every single shitcoin that you have, every single trade that you did. But on a government level, they can't even tell you how much BTC they are holding, which obviously, you know, there's like different agencies and that it's probably not as easy to accumulate that figure, but just on the headline level, it's fun to see that admission to say that on a country level, we have no clue how much we hold of this asset. So let's try to figure that out within a month.
Yeah. Well, I think it's common knowledge at this point. I think a lot of the government agencies or are really struggling passing audits in general. Apparently, according to the Doge stuff, I think a lot of them are failing audits. So that's maybe unsurprising, but appreciate your other takes. Brad, what are your thoughts? How do you think this has gone? Did you expect anything else to be in there? Was this appropriate? What do you think?
I'm honestly just going to reiterate what Legendary said. Like, it legitimizes the industry, legitimizes the asset itself. So like that has a lot of knock-on effects, and then just kicks off the game theory, right? Like we're already seeing now these states step up, knowing that this is coming, knowing that like it's always been like a standoff game, right? Between we were anticipating on a country level, right? Like whenever the Ukraine and Russia stuff was going on, right? Like like a lot of Ukrainians are able to like get their assets and like move them and like deal with stuff because of like the actual underlying properties of Bitcoin or just like digital assets broadly. And like there was always like this, and with was it Venezuela has also been buying for a long time now. There's always just been like this. Some people are leaning into it, but they're like the dominoes haven't really fell. And then once one big player starts to signal that like, oh, we're gonna do this, it does the thing of like, well, there's only so many Bitcoins in the world, and then like we need to acquire it before they acquire it situation. So like you're probably gonna start seeing some of those subsequent dominoes fall over the next few months, years. Yeah, but I mean that's the biggest thing. It's not a sexy thing, but it's a big thing.
Yeah, I like it. I think that's very much true. Is incredibly legitimizing, and yeah, I'm increasingly convinced that the states might be the people to actually lead this. Funky, you have your hand raised. You actually brought up the states initially first. Do you want to take it in that direction? Any other points you want to make here?
Yeah, just a couple. Legendary, great job in covering many of the things I would have said as well. And yes, to the point that there are states, I think there's 19 now that have bills currently going through their legislatures. Texas is massive, right? Because it is a huge state and an economy unto itself. Same thing with Florida, which I believe is the fourth biggest economy in the US and the 17th biggest economy in the world. So we're currently, we already have it happening in the Senate and in the House. So hopefully that bill will be moving forward. And then Byron Donalds, who is one of the gubernatorial candidates for 26, he has been an ardent proponent of Bitcoin as well. So he's already been speaking about it, although he's currently serving in Congress. So there's a lot of tailwinds happening at the state level. The one thing that I would love to see, however, hopefully you guys saw some of the coverage about Bhutan, this small Himalayan country that's using its hydroelectric power to mine Bitcoin. And even some of the citizens in the little video that was circulating from Al Jazeera talked about how they were appreciative of the fact that they were leveraging their natural resources in such a way that they could actually acquire more Bitcoin without having to actually buy it. So I think that could be something that the United States could really lean into. I've brought this up before. China is really the only player in the ASIC game. When you think about it, 99% of the chips that are mining Bitcoin, even whether it's Riot or Marathon or whatever, are all Bitmain. These are Chinese manufactured, rigs that are mining all the Bitcoin. So they have a huge, advantage when it comes to that. Back in the last run, right at the tail end when the bubble was starting to collapse, Intel had announced that they were going to start manufacturing ASIC chips. An ASIC, for those who are listening and don't know anything about Bitcoin, is application-specific integrated circuit. So it's meant to do that one SHA-256 puzzle. That's it. And then they quickly scrapped the plan because the market was showing that there was no interest in it. I think part of the strategic push for America should be to onshore chip manufacturing and especially have domestic American companies manufacture ASIC chips for American-made Bitcoin miners and then put them in places where they can take advantage of that cheap energy and actually mine Bitcoin for the strategic reserve, much like Bhutan is doing, without having to necessarily buy it. Now, the states go nuts, go for it, buy it, right? Like that's going to help. pump our bags, quote unquote, even though most of that stuff's going to happen OTC, much like the MicroStrategy purchases do. So it's not going to have some kind of immediate impact. But I think in addition to the states doing that, I think it would be wise for the federal government to start looking into how to get chips manufactured here in the United States from American manufacturers, and then set up in places where they can use cheap energy to mine Bitcoin and add it to the strategic reserve.
That's super, super fascinating. I'm glad you brought it up. Bhutan has been doing that for a couple of years. Actually started both mining and buying in 2019. They hold around 13,000 BTC, worth 1.1 bill. They also hold ETH, by the way, but it's fascinating to see like a small state with 800K people living there doing that. And it's definitely something that would also flow along those lines, that would allow other states to essentially accumulate BTC if they can go into mining without actually having to spend tax dollars in a direct way on that.
Yeah, super interesting. I saw that little clip as well, Funky. I thought it was really interesting to see. I wonder whether the pushback against that concept would be that in order to, you're not paying tax dollars to buy the Bitcoin, but you're still going to need to invest significantly to build up some type of infrastructure or access the infrastructure to earn the Bitcoin. So it's still kind of using the taxpayer dollars. But I take your point. If other government's going to do it, it'll be an interesting one to keep an eye on. So that is very, very interesting. Related to all of this, there were two other bits of news which I think would be interesting to just touch on to get you up to speed with. I think, Legendary, you're going to take this Senator Loomis news. I don't think this is a huge one. It's just something to be aware of. And then, Brad, you're going to take the state stuff.
Yeah, absolutely. Let's do it. The Senator Loomis news is an interesting one. It kind of alludes to what Funky has been saying, that on one hand, we have the executive order for the strategic reserve. On the other hand, there's also the law making around that would allow to solidify that even more. And as a part of that, we've seen Congressman Begich, I hope I don't butcher his name, from Alaska, coming out with his post saying it's time for America to become the first Bitcoin superpower, that he's working on something big with both Senator Loomis as well as BTC Policy Org, which is a think tank. And what they did share is that on March 11th, that is the Tuesday, alongside with Senator Loomis, there is an event happening that is close to the public. It's close to the press. It apparently has Michael Saylor as a keynote speaker there, which then again will be live streamed to talk about the future of policy for Bitcoin, with officials, top executives, and policy experts being invited to that. And this is the website where you can request an invitation. And I do think that this is exactly going into the direction that Funky has already mentioned on the show, which is to find a way to solidify the legal structure around that reserve even further, and potentially go into the direction of finding a way to actively purchase Bitcoin.
Sounds pretty interesting. I think that those extra details are super helpful. Again, I think we're in that environment where if you want to trade the market now, it's a lot about just watching what politicians tweet, which is kind of frustrating on some level. And I think some people have lost some appetite or lost some enthusiasm, because that's where the market's kind of gone. But that's what that's where people's eyes are at the moment. That's just the reality of it. Brad,
and we do have then the third piece of news, which is also linking to that, which goes back on the state level, Brad, where you have something to share on the Texan side of things.
Yeesh. So, okay, I missed that transition. Yeah, headline was that Texas surges in the U.S. states race to put public funds into crypto. And what it was that Texas bill SB 21 was actually passed. And, Funky had alluded to it earlier. Some of the, there actually wasn't a lot of details in the actual article talking about it. There was a second state, New Hampshire. They also passed the bill on Wednesday through the committee. House Bill 302 with a 61 vote. Would allow the state to invest up to 5% of public funds into Bitcoin, as well as other precious metals. So I thought that was an interesting note. But back on the original Texas one, because I think that was the headline, there wasn't a lot of details on it. I actually dug into the actual bills and some of the notes from the meeting. And the only thing of note, they don't give a specific amount that they're actually going to purchase are dedicated to purchasing anything. And they said multiple cryptocurrencies. So I dug into that and said, okay, like what are the parameters are here? And but it has to be above a 500 billion FDV market cap, right? So that functionally is just is Bitcoin. And then I was like, okay, well, closest being Ethereum. What would Ethereum have to be in order for it to be considered for this, right? And it has to do it for 12 months, right? So Ethereum needs to be at roughly just under $4,200 for 12 months for Ethereum to be included in that purchase, that bill. So, if the future is bright for it, then there's a shot. But right now, it's solely a dedicated Bitcoin purchasing agreement or bill.
Yeah, that's. I hear an echo. I think that's. Wait, there we go. Is it gone? Yeah, sorry, I muted you, Brad, real quick. Yeah, I think that's super interesting, especially that market cap perspective with the 500 bill, and obviously only that currently applying to BTC, but also more on the race, which is then not only happening between the federal level and the state level, but also then between the individual states who obviously have a bit more flexibility there. And I think Utah also has been mentioned as typically being pretty fast when it comes to the adoption of those kinds of things. And that's going to make it quite interesting in terms of the game theory that you mentioned previously, because you then have this additional level we spoke about in the show. Not only how can you now purchase BTC in a basically tax neutral way for the taxpayer, but how do you deal with the pressure of different states wanting to maybe foster that adoption faster? And why we might have said that on a federal level, it doesn't matter too much at what price the government will acquire the BTC, whether it's 100, 120, 130K, whatever that might be. On a state level, if you want to celebrate this as a win, and then you also have the electional cycle kicking in as well, you do have so much more game theory coming into that race, which is going to be interesting to observe.
Yeah, I think it'll be an endless back and forth, right? Like it's exciting for us because obviously, as you said, it pumps our bags. With some of Funky's recommendations of acquiring Bitcoin without actually having to throw direct dollars at it, I think we're that's a competitive advantage, right? So we're going to see more and more creative ways to acquire this stuff if there is intention of doing so outside of just straight money. But all of it's good for us. Hopefully, should be.
Ledger, I can't hear you.
Cool, great. Then I'm muted. Was basically just agreeing with Brett there, and also thinking that from the perspective of ETH, because you mentioned those 500 bill, ETH has been. Someone posted, I don't know who it was on the timeline, that ETH basically has been trading at 2.2K for the last 4 years across so many specific months. So for the 12 months to be at 4.2K, I do think that would take a bit more time to get there.
Well, I'll fight it a little bit more too, because ETH is inflationary now because that doesn't have a lot of usage, which means, I guess Bitcoin technically is too, right, with it being mined, but with Ethereum being a little inflationary these days, it would actually be more, or it would be less than 4.2K. So there's that.
Yeah, there's that horrid screenshot of the two ETH prices, 3 to 4 years apart, and it's the same price. It's pretty painful. But look, obviously, all of that stuff is super important. The pretty historic day in general for not just Bitcoin, but the whole asset class and for the whole industry. We will continue to bring all of the news as we learn it over the next weeks and months and everything to do with that. But as we mentioned at the top of the show, we're delighted now to welcome Paul Thomas, who's the founder of Somnia, a new high-performance Layer 1 blockchain. Paul, welcome to the stage with us. How are you doing? How are things with you?
No, I'm good, thanks. Nice to be on here. Yeah, good.
Dude, Paul rolled in here. Look at his setup. Dude's got a full-on street. You're not a founder. Look at this shit.
I had to.
Oh, this is
keep
rare.
having to do.
This is
because
rare.
I had to keep doing podcasts, and people give me trouble because they're like, "You guys, you have an awful audio setup." So I've had to buy a proper mic, proper headphones, a boom arm, and everything.
Sick. Yeah. makes me. I got the plug now. I'm on the road, so I'm I'm doing the road show. But yours is clean.
Immediately bullish on Somnia. Immediately. Perfectly prepared.
We didn't even have video last week or last time we did this because the guy it didn't work.
Yeah, we're up leveling. Look, Paul, want to welcome you to the show with us. I'm just going to intro you fully so everyone knows exactly what you're about, what your history is, and then really looking forward to getting into Somnia with you. So for people who don't know, Paul is a computer scientist by degree, quickly found himself at Goldman Sachs as a software engineer in their risk department, helping monitor traders' exposure. But he always had a passion for gaming. So after 3 years, he made the bold move to join a startup called Improbable, which many of you might sound more familiar with. Improbable focused on distributed systems and virtual worlds and went on to achieve unicorn status with a valuation over 3 billion and attracted significant investment from firms like SoftBank, Andreessen Horowitz, and Horizon Ventures. After leading various teams at Improbable, last year, Paul spun out Somnia with Improbable team backing to address the scalability and usability challenges of existing blockchains. So in this conversation, we're super excited to talk a little bit about Paul's journey towards Somnia, the vision behind Somnia and its product, and how Paul thinks about building the blockchain for the future. So Paul, before we maybe get into Somnia itself, I wanted to ask you maybe about Improbable. It sounds like you are, sounds seriously cool, first and foremost. Focusing on large-scale virtual worlds, particularly for gaming, the metaverse, real-world applications like defense and urban planning. Sounds like you're one of the first people at that startup as well at one point in time and scaled it really significantly. So what was it like taking a startup through to something that was like unicorn status?
Yeah, it's pretty mad. So I started there when there was 4 of us back in Herman's house. Herman's the CEO, literally like 4 of us in these janky tables, which we kind of made from IKEA with these chairs. Everyone, basically, the whole thing, you had to build your own desk and chair when you started Improbable. Was kind of like the beginning. We went all the way from that to like, I think when I left, it was like 1,200 people. So it was like a massive business with like tons of people and tons of stuff going on. Raised, I think, like $600 million over the time, became like $3 billion valuation. But I think, so it was mad, right? I started off as a core engineer, just like day-to-day working on stuff. I quickly went over to the game side of the business because I'd always wanted to build games ever since I was a kid. Like, I love video games. It's my passion. So we quickly, after about doing that for a year, we realized that we weren't great at building video games. That's a very specific skill set that you need, but we're pretty good computer scientists. And we basically built this tech that allowed you to build massive online virtual worlds. So kind of imagine like World of Warcraft style games, but they could have more players and be more large in scale. So we're kind of like, okay, we're going to take this to market and take this to the games industry. So at that point, I turned it into a platform product, put it on the cloud, essentially put a set of web UIs around it, started taking that to market. But I quickly kind of moved away from the engineering side and moved over to like the support side of the business and the sales side. So I became the first support engineer. That was me by myself in the beginning. Super stressful because we had our first 3 early adopters. The tech was always broken. I was running around with my hair on fire. But that's where I learned I love much more helping customers build stuff and understand problems than I do just building raw tech. So I grew out the support team, replaced myself there, then went into the sales side. So I was the first sales engineer going around the world selling our technology to the AAA games industry with our head of sales, Michael. Then eventually just became a sales guy in general with obviously a technical slant. So I'm still very technical at heart. Did that for a bunch of time.
Who are you selling to, by the way, at that time?
So at this point, so first of all, we start off with the independent games industry. So these are smaller studios, tend to be 10 to 30 people who are independents, essentially. But at this point in the journey, we're now selling to like AAA. So people like Ubisoft, Wargaming, those kind of big names are the people we're talking to at this point in time. It's very hard to sell technology to the AAA game industry. I would tell people don't do that in general, especially if it's technology that enables new kinds of video games. They tend to be second movers by nature. So what I would advise people, if you're in Web3, probably don't go hard on the AAA industry. Go for the independents, make them find the new games that have never been built before, and then go AAA. Anyway, that's just my thesis.
I guess that's risk on top of risk for them, right? Because like
exactly,
new IP on top of new tech. Like what are we doing here, kind of thing.
Exactly. If you think about, they're massive, big businesses, right, with equity holders that are holding to account every quarter. If they go and take a huge risk in a new sector with a new IP, their investors are going to be like, what are you doing? Why aren't you building Call of Duty 17? And so they've always been second movers. Some of them are a bit more innovative, but they tend to be second movers. If you look at mobile, they were super late. They then bought studios and acquired them, and now have got back in. Free to play, they were super late. I remember when the industry was like, free to play will never work. I was like, okay. Then it took off and became the de facto standard. So they tend to be second movers. And that's why I would say if you're doing Web3 or selling Web3 technology to them, probably wait until we see some breakout hits first and then go to them.
So was all of that really cool tech specifically Web3 integrated at that point in time, or is that something that came later? Or where did that interest come from as you were kind of obsessed with just building cool games? Or tech
Yeah,
for
so
cool games?
So we started in Improbable like 14 years ago now, right? So it was before really Web3 was around. So in 16, 17, when Ethereum kicked off, I kind of fell in love with it. I was like, this idea of this globally distributed computer, which anyone can access and everyone can use. I was like, this is amazing technology. I never really got Bitcoin. I've only really recently actually got Bitcoin because I just didn't understand Veblen goods. I don't understand this concept of like price go up because people want it. I get it now. But so Ethereum, I was like, all right, this is awesome. This is going to be the future of digital assets. We need to get all of the games in the portfolio on top of this. NFTs are going to be the future. So I got a small research team in 16, 17 and tried to do some like experiments. Basically all flopped, all failed. The tech just wasn't ready yet. Like Ethereum, very cool idea, but in terms of the scalability to really hit the use case of games where you have millions of people trying to transact in very short time spans, doesn't really work. So fast forward to 2020, and we've started to do the metaverse now. It wasn't called the metaverse yet. We just called it digital events in the sports and music industry. And at this point, we're selling to lots of big brands like Major League Baseball, Universal Music, and they're all individual companies that want to own their own metaverse. And the problem we have is consumers want to go to these, buy digital goods, and then use them across all the experiences. And that's an interoperability problem. And so you have to have some kind of ledger of saying who owns what. And I was like, all right, cool, blockchain. This is the thing that you need here. You need this distributed decentralized ledger. So I again start a research team to kind of look at this and be like, okay, how can we solve this problem? We look at all the tech that exists in the market at that point in time. We're particularly wedded to the EVM, I should say. I've taken in the past technologies to market where I tried to get new programming languages adopted by developers. It is so painful and so expensive. And I was like, I'm not doing that again. We are going where the devs are. We're going where the ecosystem already is. So in the EVM ecosystem, we couldn't just find anything that's fast enough. The problem we had is we had tech that allowed you to get tens of thousands of people into the same digital experience at the same time. So this would be done for music concerts, for digital sports games. But if they all try and transact on chain at the same time, just blockchains blow up. They're not really designed for that. People have now got to wait seconds, if not minutes. And so we added like loads of Web2 caching layers and we had loads of race conditions. I was like, it's just not working. So we started then doing first-party research into a high-performance blockchain. That's basically what Somnia became at the end of the day. So I've been interested in the space since basically Ethereum came out, but really got into it properly, I'd say, in 2020.
Very interesting. So I guess was the inspiration for Somnia then this almost out of frustration for not being able to build specifically what you wanted? Does that mean you're envisioning Somnia as something that's very much gaming focused, or is it something broader? Just want to give you a chance to speak to the general vision.
Yes, I think at the end of the day, Somnia is a high performance layer 1 EVM compatible blockchain. So you can do anything on top of that. But my belief, and again, this is different to lots of people, I think chains need to specialize into different verticals and segments in order to be successful going forward. I think so far what you've seen in the industry is like general purpose blockchains that basically go to market as like compute platforms or layers. That used to work, but I think what you'll see over time is people having to specialize. I think in the next 3 to 5 years, 3 years, I would say, with chain abstraction, end consumers won't know what chain they're going on. They just click buttons and have fun in end consumer applications. They won't even know what chain they're running on. And so I think people who are building blockchains, you start thinking about what am I trying to fix in the industry and who am I trying to serve? And so I think we're going to be very focused on that gaming and metaverse sector, which we tend to call entertainment now because metaverse is a bad word. But I think we're going to be very laser focused there. This is because of the background we have. And also we understand the problems that game developers have. The blockchain is one component there, but there's a load of other services that we're going to build out that really kind of make us a really good place to build on-chain games and Web3 enabled games.
That's really interesting. I'm going to hand over to Brad in just a second, who's going to maybe dive into some more of the product stuff. One question purely out of curiosity, you mentioned like the metaverse becoming maybe less fashionable, at least in name now. Why do you think that was? Was it just that period of time, or a certain period of time where it just didn't quite work out, and then it's kind of got this hangover of stigma attached to it? What's the thinking there? What's your vision for like how it can maybe come back in some way?
Yeah. So I actually think different. I think people in the Web3 space have this concept of based on the metaverses that were around back in 2020, 2021. And I think that's the metaverse. In my mind, there are actually very successful metaverses that are running today, but they just run on Web2 rails. So if you think about Roblox, I don't know if you guys have seen Roblox, it's a huge game. And that is a metaverse by any definition of the word. It has UGC platforms, has hundreds of millions of MAU. It is a very successful metaverse. I would also say things like Fortnite, that is another metaverse that is being very successful and working very well. So I don't think the metaverse actually ever died. It just kind of died in Web3 a bit. And I think one of the kind of vision pieces that we want to enable is kind of like a decentralized Roblox. So the same concepts and primitives, we have UGC, we have all these players, but it allows actually good economics for people building businesses on top of that decentralized Roblox, and much more freedom for the creators, interoperability, portability, all that kind of stuff. So I think the approach was sort of wrong. What you had in the previous cycle was essentially centralized platforms with Web3 enabled stuff like tokens and NFTs. I think if you kind of blow that out and turn that into a more decentralized manner, I think has a much higher probability of success. But yeah, I think we kind of gone away from the word metaverse because it has that stigma in the Web3 space. We actually started, when we started Somnia, it was called the Metaverse Computer. We were super focused there. And I was like, we need to shift away from this because everyone keeps telling me the metaverse is dead. And I'm like, okay, cool, better react to the market.
Kill the metaverse, make Somnia alive.
It's just digital entertainment. There you go.
Got it. Yeah, I think that makes complete sense, to be honest. Yeah, I was just curious on that part. I want to hand over to Brad now, who's going to maybe dive into some more of the product technicalities.
Yeah. I mean, I love the self-awareness of all this shit. Like the EVM, bro, I'm not fighting that fight. Or like even go back to like Bitcoin, like bro, like the market's telling me something, I'm buying Bitcoin now. And now with the metaverse, like bro, okay, right. Lesson received or message received. I'm not gonna call it the metaverse because like, yeah, as a technical person, and that happens so often in the space where I call it, everyone calls it mid-curving, right? I mid-curve shit. And I'm like, oh, this is how this should work. And like, no, bro, you're not seeing the left curve, right curve light, and you need to back up. Okay, I accept. I just admit that I'm wrong. That's awesome. Okay, so you kind of covered what Somnia is doing already, or like just the high level of what it's achieving, right? It's an L1. It's highly performant. EVM compatible, I'll say. And then I see here that like you guys are calling out 1 million TPS, which obviously is a huge number relative to what we're seeing today. Like just for context for people listening, like Solana just dominated or is dominating the market right now. And I think they're averaging out at like 1,300 TPS, right? So like we're talking like orders of magnitude higher than what we're seeing today. When I look through the docs, and like this will be a little bit of a journey for both of us, I see the multi-stream consensus, sorry, is the verbiage for it. And like, that's interesting to me because when I think about what's in the landscape today, right, you think of a lot of these sharded systems, and the sharded systems can be like come in a bunch of different ways. One, I want to ask if it is a sharded system, but like just to, again, draw comparisons. So maybe we can like do this to contextualize the conversation. People think of like an Avalanche, right? Where Avalanche has C chain and then a bunch of other smaller chains that are connected to it. You have like, you can call like the Ethereum rollup kind of a sharded system, right? All these rollups are not very interoperable, but they're kind of supposed to be long-term and interoperable layer of a bunch of these L2s. Like Multiverse X, there's a lot of these systems that deploy mechanisms similar to this. Now, your construction specifically is you have each of these data chains, which each node produces its own blockchain effectively, right? It produces its own blocks. Yep. And then you have a separate data chain that actually pulls all those things together with this multi-stream consensus. Can you walk through your unique innovation with that and like how that is different than other, like I would say, sharded systems? Because I see that it in the notes it says not like or it says loosely synchronous. Expand on it for me, please.
Yes, I think the key thing is, so people always ask me, is this like parallel? Is this like sharded? It is ultimately like a sharded system, but the key thing is there is a global consensus across all of the shards, so that when you as a developer are accessing this, it's a global state basically. So the way it works is each individual node is almost creating its own blockchain. So we call those data chains. And then there is a global consensus layer that's running continually across all the chains. And that is the head state of the blockchain. So that's very important because that basically is showing everything together. So that means that everything is composable and interoperable. Doesn't matter what data chain you're accessing. In fact, developers don't know what data chain they're accessing. They just deploy code and then it gets put on the right place. The way that works is those data chains progress at 100 milliseconds in terms of their block time. So it's kind of relatively quick. But that global consensus actually runs at 20 milliseconds, so very quick. And it's a PBFT algorithm. So it does partial consensus across all of it continually over and over again. And then all of the validators who are each running those data chains are continually reading from that consensus chain to look at what is the current head state of the chain and make sure there's no collisions within their chain. So that's also very important. So you don't have the problem of this data chain modifying one thing, this data chain modifying the same thing, and then colliding. So because of that, you can kind of get a grand throughput of 1 million TPS because you're basically putting together a load of blockchains, but they're all composable and interoperable because of that global consensus layer as well.
Yes.
So that for people that want to go into more detail, there's a white paper called Autobahn BFT. We actually invented this and then found that white paper, fun fact, because we created this structure and then we found this white paper. We're like, oh, that's what we're doing. Cool. Someone in academia has actually come up with this as well. So you guys can read that and go into it in a lot of details. They give a good analogy of like, imagine each validator is like a lane on a motorway and the car can progress as fast as it wants to. Then there's a guy on the side of the motorway continue taking pictures, video of it and streaming it to the people in the cars so they can see what all the other cars are doing. I like that analogy, but it's still a bit weak.
Yeah,
it helps us non-technical people on some level.
Dude, I make my living drawing pictures, so like I usually have to lean into shit like that for like describing this technical stuff. Now, okay, so you mentioned 2 times there, like the 100 milliseconds and 200 milliseconds. Are those hard coded, or can you have like I just think of a scenario where like one validator, right? I envision I'm creating a game. I have my own data chain, right? Because like I want to control all my shit. I want my thing to be super performant. Can I actually change that stuff to be accelerate faster than like the other 100 millisecond data chains, so that like there's a little bit of like a difference there?
Yeah, currently not. So currently one of that is kind of hard coded, and that also kind of brings up there is an important part of the system where you can't have one of the validators being super slow. So if validators are slow, they get kicked out of the system essentially, because that would mean that they're going much slower than everyone else and people can't keep up. So you can't clock it faster than the consensus chain. So that is like the limit in terms of what you could do. We have thought about this idea of like taking people who are able to run their own data chains so they could have super high performance for an individual game. Then you could get down to like 50 millisecond, 10 millisecond style blocks. But I think the problem there is you don't get that global consensus. And I think one of the vision pieces that we strongly believe in is having everything interoperable and composable. I think this is one of the issues with the Ethereum L2 model. Those systems, I think they will become interoperable, but I think composability is going to be really hard with L2s. And that we really think is a massive edge and a massive part of Web3. We're big believers in this idea of what I call composable games. It's the fact that you start to build your game logic and put your data fully on chain. Now other people can start to put their logic, fork off yours, create their own mini games, create new apps on top of that, maybe like a prediction market or something like that. I think that will create like a Cambrian explosion in terms of video games. And that I think is huge for us. That's why we kind of have that system set up like that. So you get that composability and interoperability from the ground up.
Yeah, I think that's actually like, I think it's pretty objective at this point that the lack of rails that are in the Ethereum roadmap have led to a lot of the fragmentation that we're experiencing today. And then on top of that, you see just like user behavior tends to trend towards like these power law effects, right? Singular L2s are eating up a lot of stuff. I don't know if you anticipate the same thing on yours, but, and then just to keep this stuff in with the analogy that we started with, right? Like the question I asked was like, you know, we're all cars on a Autobahn, right? We can just stick to the consensus thing, right? We're on the highway. I just made my car really fucking fast, and I could go faster than everyone else? And he's saying no, like you roughly keep them all in about the same configuration, so that most of them go about the same speed, so they're all producing the same amount of output at the same time. And you can because of that interweave them pretty easily. One other question. So like I talked to Nil on that's another L2. Does it? My headphones died, and now Space is yelling at me. All right, I'm out of there. Sorry about that, guys. So I talked to Nil, who also does a sharded system, and my question was like, okay, you can never anticipate like typically the theory with sharded systems is not everything needs to be synchronously composable, right? Like I don't need to have atomicity with the thing right next to me all the time, right? Uniswap doesn't always interact with other deeds, right? Like you don't need those two things to talk, even though you do need some things to talk, like Uniswap and the Uniswap proper. Cool. But you can't always predict which things need atomicity, right? So like Pump Fun and Jupiter on Solana probably need some atomicity, but you don't need Pump Fun and Claim Source, the NFT, right? But you can't predict that stuff out the gate all the time. So I asked them at the time, like, if I were to deploy and be on two separate data chains, this would be for you. I'm in two separate cars, but for me, I want to have as little lag time between my car and someone else's car. Can I, after the fact or retroactively, move which car I'm sitting in so that I and the person next to me can just like shake hands, bump shoulders, do whatever after the fact?
This is so interesting. So the decision today is no, but you could do that. And the reason why we decided on no is that, so I've made systems in the past where, so the MMO system we made, we tried to do this essentially. So you have lots of disparate servers and you try and essentially get them to simulate parts of the world where everyone's interacting. You can do that a bit better in video games because you have position. So you kind of know things that are close to each other are going to interact with each other, but you still had loads of problems with like long range interactions, which caused problems. So I think at the moment, that is not a thing, but that could be a thing that you start to co-locate applications that are highly composed and very, very interoperable together. And that would reduce their latency to basically zero. That is not a thing today. Today, it is a globally uncharted context, which you deploy into, and you don't worry about any of that. I think the issue for me is if you start going down these paths, developers have to really start thinking a lot more about lots of other things. I think it just gets in the way of development. I think what you want to do is just go write some code, deploy it, and it work really fast. So my answer to this is you could, and you could also do the sharding stuff you talked about before, where you pull out your own shard and make it go super fast and commit back. But I think we've made the decision not to do that from a developer ergonomics perspective. There's no reason technically you couldn't do it. It's just not a decision we've made today.
Nice. And then, like, so we're talking about the tech. Seems pretty interesting. What's the current state of things? Is testnet available? Can we go play around, touch and shit?
Yep. Yeah. Testnet just got released 2 weeks back, so you can go deploy. People are doing lots of crazy experiments with it. We spiked up to about 1,200 TPS. So we're trying to get more developers to really push it and basically break it. We kind of actually want to see it broken.
Nice. Is that single data chain? Like that's actually really good if it was single.
No, so that's currently running across 20 globally distributed validators, so 20 data chains. And then we'll scale up to 100 in the next 5-6 weeks. So the whole point now, we already did a DevNet kind of back in October. That started, that was public. We decided to make that public because we were like, let's see what happened. That was a singular data chain. But now, then we ran it with 100 data chains, which is how we got that million TPS number, basically. It's just running across 100 blockchains, essentially, all stitched together. So now though, it's kind of like prime time. So it's always on, no state wipes. You can deploy. There's all the infrastructure pieces as well. So we've got all of the stuff from Ethereum, like subgraphs, like indexes, all the kind of stuff you need to build. So that's all integrated now. So essentially, for me, the next step, I'm really intrigued at what developers build. Like, given the unlock in terms of limits, what can you build now that you couldn't build before? We've got some people experimenting with fully on-chain games that are kind of going a bit mad, I'll be honest with you. The reason is we're also pricing it super cheap. Like gas is going to be so cheap. In fact, at the moment, we're slightly worried it's so cheap that people might DDoS the chain. So we might up it a little bit. But yeah, it's going to be really cheap to run as well. So testnet is live now. You can go deploy to it. RPC details are in the docs, and people are using it day to day.
Love it. And like, just for reference, like you guys scaling up to 100 nodes is actually like, that's, I think, starting to be seen as like the standard node set. I think like Aptos and Sui, a lot of these things that have that BFT consensus, or like that's about the limit that they all exist in. And I think we're starting to see that is like an objective limit to hit and still maintain a good level of decentralization. So I think that's awesome to see. I don't want to take too much more time from Ledge. He's got a piece coming for you, but I appreciate all the time.
Absolutely. Thank you, Brett. Look, we talked a lot about your history, about the product, and the thing that I'm interested in is you mentioned that blockchains need to be specialized. That's a view that kind of has changed. It worked to just be the compute layer, but now we need to be more specialized. And you also mentioned that you have devs coming, testing games on testnet, seeing how far they can push that. So what I wanted to ask you is, how do you think about, now that you obviously have this specialist views of wanting to bring the world on chain, wanting to be there for the entertainment industry, of attracting, on the one hand, the right builders, on the other hand, the right users? How do you generally think about even incentives when it comes to that? On the one hand, I've seen there's the Somnia quests on testnet. On the other hand, obviously, you guys have been active on Kaito, which is that info-fi tool to build out the social graph. So basically, in this like grand scheme of things, and also keeping in mind that there's like a plethora of L2s, of EVM compatible L1s who are all trying to find their niche in our industry, how do you even think about finding the right builders and users, and how do you think about incentivizing them? Is it something you think that should happen, that there should be a clear incentive for them, or is it something where you think about like a different set or layer of motivations to bring users to your chain, which should maybe be more intrinsic? Or do you want to win this by just being the fastest and actually being the place that makes it even possible to bring some of the more complex games, the MMO-like games, to your chain? Just wanted to explore your mind on how you think about the user and dev side of things.
Yeah, so this is super big question. I'll try and go through it relatively quickly. So for me, in terms of the dev side, there are two categories of devs that I'm particularly interested in. So one are actually Web2 game developers who want to move into Web3. I think there is a lot of high quality talent that lives in Web2 that builds fun games. I think that's what the Web3 game space needs, fun games at its core, and bringing them to Web3. I think there's a really good moment for that, because the industry goes in like cycles of like reconciliation and deconciliation. So at the moment, everyone's leaving AAA to create their own indie studios. It's a really good time to capture those really high quality teams and bring them into Web3. So I think that's one side. And then also getting the Web3 native teams as well, because I think they understand the mechanisms and mechanics that work well to incentivize user bases and get people kind of traction there. So how we're looking at putting those people in is twofold. One is game developers need two things. They need money, which comes in the form of technology, staff, go-to-market support, or pure cash. We're offering up all of that across the board. Go-to-market support will be primarily, we've in my previous company in Probable, we took to market 3 games. We have a pretty strong publishing team that can help people understand the business side of games, how to take it to market, how to get in front of streamers, how to get in front of influencers. The money side in Probable has raised a lot of money and is deploying that to games and projects into the ecosystem. And then the kind of staff side, Probable have about, I think, a 300-person game services organization, which they can help essentially people build their video games with direct services support. So that's how we're attracting builders. I think the big thing for me, though, and the real unlock is the player base. So really what we're investing in and building up a lot more outside of the technology is a lot of players who want to play these games. If you can bring developers eyeballs, distribution is one of the hardest problems in gaming. That solves a massive problem for them. So we're now starting to build up kind of an ecosystem of players that we can then inject across all of the games in the ecosystem, and that gives them players day one. Now, the way we're doing that today is quite, I'd say, blunt force with the Web3 mechanisms that you kind of talked about. I think the real tricks there are looking at partnerships and places where you can bring in player bases, things like internet cafes, things like esports arenas, that kind of jam. So for us, building up that core player base and that enabling distribution for the game developers is going to be key. The other thing as well we're looking at are product offerings that help people with the business side of game development. So what I tend to find is game developers are very good at building video games. They're like artisans. They're really smart. They understand kind of how to craft a really fun game. But the business side is something that some often teams lack. This is like understanding their metrics, understanding how players are attentive, understanding what the ad features, how it changes their game, understanding how to publish across all the major platforms. So I think we're going to think around tooling and workflows and software that helps them do that end to end, almost like a digital publisher, is the way I put it. I think that will kind of give us an edge and help people. So yeah, I think it's quite interesting, right? Because a lot of people just think about the blockchain technology, but I think the blockchain technology is an ingredient in a broader set of things that I really think about ourselves as an entertainment publisher, and how you kind of take that to market. It's how blockchains need to be successful in the future.
I actually really love this holistic standpoint, because even if you look at the existing landscape of Web3 games, you have some of the Web3 native games who now try to go Web2 and find a traditional publisher that allows them to be on Nintendo, on the Nintendo Switch. And there's like a couple games who try to do that and get like a package deal to be now available on Nintendo. And you have to basically fragment everything, the building the tech stack, building out the game, finding your user base, the GTM set of things, going back to the normie world of regular gamers. And I like that you basically flip that on the head and are like, no, we are building everything except for the game. We have the tech stack. We are building on working on the distribution to get the gamers, the players as well. And then you basically take all of this and now specifically go to the indie studios and talk to them to get them excited about what you're working on. And they're like curious to know, how is the sentiment on the indie side? Because I can imagine, you're spinning off from a AAA studio, then you get approached by Somnia and they're telling you, we have the money, we have the tech, we're going to work on the distribution to bring you the players as well. But quote unquote, but it is built on the blockchain. Is this the sentiment that they're a bit skeptical? This is like the big but, that it's something to do with crypto. Where's the sentiment towards that more positive? How are indies feeling about that pitch that is tied to blockchain?
Yeah, so I'll be very honest here. Indie developers from the traditional games industry are still very skeptical of crypto. I think they always ask the question, why? Why does it matter? We've been building these kind of games with these kind of digital assets for like decades. Why do we need this? I think then getting to understand that this is a new way to monetize. There's new business models here that you can explore, and kind of getting them to realize that all of a sudden gets their head thinking, because you tell them what's happened in the games industry before. There's two things that created major genres: platforms, so mobile, console, and business models, free to play, expansion packs, all those kind of things. And when they start to see that there is new potentials in terms of business models, I think that really gets them going, because they start to realize there's an opportunity here that maybe not anyone else sees in the space, that we can potentially take advantage of an independent studio. I think the biggest problem, though, is kind of what you're talking about. You have this fragmentation issue. Like if you want to deploy to Steam, which is the major distribution channel for PC, you can't put crypto stuff in your game. They'll ban you basically straight away. So you have to create these kind of dual games where you have one version of the game that's like a Web 2 game, and then a bridge into the Web 3 version of the game. I think that's still one of the biggest challenges for the industry, how you solve distribution with the major channels that already exist today, and cross that chasm and make that bridge work. I think what you kind of have to do is you make what I call a Web 2.5 game. So it is a Web 2 game and attracts a Web 2 player base with that, but then they could convert into a Web 3 player base through some kind of secondary game or second experience tile mechanism. Because ultimately these guys still are the gatekeepers. They have distribution, they have all the players and all the eyeballs today.
Yeah, absolutely. That makes a lot of sense. And I've seen it with another game who basically have exactly the same challenge. They want to be listed on Steam. They're thinking to make their in-app purchases for Steam fiat-based, have the same in-app purchases based in their own native currency, but then obviously they want to have cross-platform play. So definitely agree that this is a massive, massive challenge. Another thing that I wanted to bring up is something that you mentioned right at the start of the interview that maybe goes a bit away from the gaming side of things and more to your like personal experience as a founder. You said that it took you quite a while to arrive to to accept the fact that Bitcoin and so many of the other things, NFTs in our space, are Veblen goods, becoming more desirable once they go up in price. And now we have this situation, plus B, we have a market that's very volatile. We have obviously the Bitcoin strategic reserve. We have announcements coming from a government that is a bit similar to NFT founders talking about the projects. And that moves the market quite a lot. So we maybe moved a bit away from the meme coin mania, which seemed to be like quite distractive to some of the founders. But now we have like a lot of volatility in the market. And then we're curious to see, like, is this impacting you in any way in how you're building on the one hand? And is it also like impacting, maybe, again, going back to the indie gaming studios, now you delivered the convincing pitch of what actually makes sense to find the new business models. And then now they even see something like BTC going up and down 10% on a day. So how do you deal with the volatility in the market right now as a founder?
Yeah, this I think is actually one of the most challenging things about being in Web3. I talk about, when I talk to the team about our business, I always try and instill a long-term view. If you look at people like Jeff Bezos at Amazon, he always told his employees, don't look at the stock price. Don't worry about the market. The market will do its crazy thing, go up and down. As long as we deliver a good, durable business that has long-term value, we will succeed in the long term. But it does, as me as a founder, play on me a lot. Like, I know we're going to go to mainnet this year. That has certain things associated with it. And I feel this kind of pressure to do things in the short term that I think may not be good for the long term of the project. And this is something that people have to balance, I think. For me, I constantly tell the team, let's think about what we can do that keeps us long-term durable and try and phase out the market and not think about it, because that will eventually make us successful. But it is very, very difficult. It is very, very difficult. I found it really funny going to ETH Denver. I've been there for like 3-4 years now. And it's the mood at these conferences is so tied to where the market's at. And I felt like a real low mood for certain people because they were like, oh, Ethereum's not doing so well. Bitcoin's not doing so well at the moment. And I kind of feel like we as an industry need to like sort of like phase out the noise and not think about it. Because I think I've talked to some founders and they just react to their token price continually. They'll all of a sudden go mad to their employees because their token's gone down. And when their token price is up, they're like elated. I'm just like, you need to phase it out and not think about it and almost be like a meditative monk. But it's hard. I totally feel that myself, and it's very, very hard.
Yeah, I can imagine that. It always makes me think about Yuga Labs and then Activision Blizzard, a CEO coming in and having a bunch of us crazy people screaming at him all the time about different floor prices of assets. It's probably super, super hard to ignore the noise in Web3. But anyhow, we've been going with this interview for a good time. Begich, I know you have a couple of questions yourself as well before we have to close for the day. So I'm going back to you.
Don't let him get out of here without talking about his video game. He came here, he wants to play a lot of video games. I want to hear his favorite video game. Talk about that. What? Just quick. It doesn't have to be like Begich will do his shit. I want to hear what your favorite video game is. You said you're a avid guy.
All right.
Sorry, what did my favorite video game? It's Ocarina of Time. Zelda Ocarina of Time.
Nice.
This is because of the nostalgia. So this was before the internet was a thing, but you didn't know what was going to happen in video games ahead of time. And I always remember the bit where you travel back in time, and it kind of blew my mind. Also blew my mind going from 2D to 3D, seeing Zelda. I played it on the SNES, I played it on the NES, and I was just like, seeing this in 3D was magical. So yeah, Ocarina of Time is my favorite game of all time, closely followed by Final Fantasy VII. These are both single player games, interestingly, even though I played World of Warcraft for like tens of thousands of hours, and RuneScape for tens of thousands of hours. But yeah, those two are still my favorite, I think.
Pretty fun. Bread guy likes it. Bread's a bit of a gamer and legendary as well himself. Okay, last couple, Paul. We're coming to the close today. You just mentioned mainnet there as like part of your roadmap coming up. I just wanted to give you a chance to maybe speak to mainnet. What are the next set of plans? And is there anything else that you'd like to share?
Yeah, for us, so we haven't set a mainnet date publicly yet, but it's on the horizon. I think for us, it's all about building out the ecosystem of projects now and kind of announcing those, getting those out there, getting people playing them, getting people experiencing that. Because so far, we've kind of just got to the point now where the technology is stable, all the services and infrastructure are there, so you can just go at it basically and build stuff. So for us now, it's really about fostering and growing out that ecosystem, bringing in players and consumers to play those games, and then building up towards mainnet. So that's one part. That's more like the business side. The other side that I'm very excited about and we're pushing a lot is just getting the tech in front of developers and asking them, what can you build now that you couldn't build before? What have you thought about in terms of an on-chain application that you were like, I can't build this because of current blockchain capacity, and what could you build now because of it? And that we've seen already some really cool things, really exciting things come out of that. And that's, for me, actually, I think I'm actually almost more excited about that because I feel like there are applications out there which have been in people's heads, which they just couldn't build before, and now they could. And I just want to see what those are and see what the possibilities could be.
That's awesome. Sounds very, very exciting. I guess the best place for people to follow along will be the official Twitter account. Is that fair to say?
Yeah, Somnia_network, or you can follow me at 0x Paul Thomas. I just chat about games and blockchains, basically. Yeah.
There we go. Showing it on the screen if you'd like to follow along, if you're further interested. Paul, it's been a great conversation. Thanks so much for joining us. Looking forward to see what else you have coming out. We'll be following along with what you've got going on at Somnia. Thanks so much for your time. Just a reminder to everyone else in the audience, we do this every single day, Monday to Friday, 7 a.m. for 1 hour on X, YouTube, Apple, and Spotify as well. So have a wonderful weekend. Take care, and we will see you on Monday. Thanks again, Paul.
Thanks, all.